Hello and welcome to the stock market analysis. We're going to look at Tesla today. Well, the stock is definitely in a very bad downtrend. Something that I do not like to see is that it's below the declining daily 20 MA, below the declining 50 MA, and the 200 MA is declining. You never want to touch this kind of stocks when it's below all three moving averages, and when the faster moving average is below the slower moving average, you can usually see quite a lot of damage, even right here, and then stock went further downwards. You can see that after it broke this uptrend line, it just declined. And here we can see it break below support. Support areas are very important. Uptrend lines are also very important as the stock declines. The moment it breaks, you can see huge sell-off. The moment it breaks, gap down and lower. And you can draw another uptrend line here. When it broke below this uptrend line, boom, all the way down. And this stock has been in the downward move, broke below this uptrend line, gap down. So you can see that usually you don't want to touch a stock when it's below the 200 MA. It has quite a long time it has gone below the 200 MA and it's just zigzagging up and down. Let's take a look at the 6 weekly chart. You can see that, well, it made a high here back in 2020 onwards, 2021 up to 2022. It was a very nice stock that kept moving higher. That's because it was trading above the rising 20 MA. 50 MA is rising, 200 MA. The weekly charts are rising. You can see a break out here. Actually, when the stock is in a weekly uptrend, there are a lot of viable setups and areas. Here as well, the stock form a double bottom. Traders can buy the break above the downtrend line, put the stop loss and ride it higher. But you can see weaknesses start to happen when it starts to break below uptrend line in the weekly charts. Here, it went up, down, went up, but not able to go above the highs here. That is weakness number one. Then it traded down, found support at the 50 MA, make a bottoming tail, and that's why it rose. But you can see this high can't even go above this high. Don't need to mention about this high. Stock that cannot go above the previous high usually tells us that there is something weak, things are not good, and that's why it's declined. And here we have a bearish cross, and then it went all the way down. But interesting here, it formed two bottoming tail weekly chart, and this can be a nice trade where you buy above the two bottoming tails, put a stop loss and ride it higher. Here's this bottoming tail, so hinted of a short-term move up. But right now you can see that 20 MA in the weekly chart is declining. It's something that is not good. And since it has broken below this support level, let me just draw this support level, previous low here. It has broken below this support level, hence the next area will be this lows here, right? This area will be a resistance area. Support once broken becomes a new resistance area, and that is why it's not a good idea to long this stock at this moment. If monthly chart, let's see, okay, we might be forming a double bottom in the monthly chart. I don't know whether you can see it or not. Let me just draw this downtrend line and a possible double bottom in the monthly chart. But if you read about all these electric car companies, they are selling off because of lack of demand. So you want to see if Tesla, those who want to invest and see that Tesla is going to make new highs in the long term for investing purposes. The monthly chart, if it drops to the lows here from a double bottom and breaks above this downtrend line, then there might be a chance for it to go back up. But otherwise, it's not a good idea to buy this stock at all at this moment, because it's below the declining 200 MA, 50 MA and 20 MA. I don't see any bottoming right now. So you do really have to be very, very careful when you think about investing in the stock. Yes, you can buy it for short-term trades, or you can just short the stock, like here you can short it, like here you can short it, the breakdown you can short it and cover later, but definitely don't buy it for investment purposes. Now going to the very short term, this 60-minute chart is below the 60-minute 200 MA, 50 MA and 20 MA, and whenever the stock is below this moving averages, it's actually a sign for you to short the stock. For example, here's a continuation pattern. You can short it, break down, put a stop loss right lower. You would have made a very good risk reward, cover it, and just don't touch this stock even in the short term if it's below the 60-minute 20 MA. So I hope that this analysis is helpful to you, right? And I'll see you in the next one.